This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
Wary of Washington, fire and brimstone comments magnify the tensions over the gridlock surrounding the government shutdown and a looming possible default of U.S. debt. And that sends investors running for cover.
Dancing on the ceiling. So what does happen if the U.S. doesn't raise its debt limit and defaults? We'll look at the ramifications.
And innovative ways and how hospitals and drugstores are looking to improve health care. We'll talk with the CEO of Tenet Healthcare and the president of CVS Minute Clinic. All that and more on this very busy Thursday, October 3rd. Good evening, everybody. I'm Sue Herrera, filling in tonight for Tyler Matheson.
And I'm Susie Garrett. Good evening, everyone, from me as well. High anxiety in Washington and on Wall Street today. Forget the government shutdown. Today, it was about the looming debt crisis. Apocalyptic words coming from the U.S. Treasury today, saying a default on the nation's debt could be, quote, catastrophic. A scenario the Treasury says would be worse than the financial crisis and Great Recession that we're still emerging from. That pushed the markets sharply lower at the open. By midday, there was slight relief after a New York Times report saying House Speaker John Boehner would not allow the U.S. to default. Boehner's spokesman then said the speaker has, quote, always maintained the U.S. will not default. That brought stocks back momentarily. But now, if that weren't all enough, mayhem outside the U.S. Capitol after police shot and killed a woman who tried to ram her car through security barricades at the White House and then exchanged gunfire with the police. All in all, it looked like it ended like this after the market closed. The Dow fell 136 points, closing just below the psychologically important 15,000 threshold. The Nasdaq lost 40, the S&P off 15 points.
Unless Congress settles the debt ceiling crisis within the next 2 weeks, the U.S. Treasury says it'll reach its borrowing limit on October 17th. So what then? Steve Leisman takes a look.
Good evening. Markets turn their attention today beyond the government shutdown to what happens if the debt ceiling is breached and the government can no longer borrow. Here's what we know. In that event, government spending has to equal revenue plus the cash on hand. What that likely means is government spending will fall by about a third, or a $108 billion decline in government spending in the first month. That means a contraction of the economy. The economy will be smaller because there'll be less government spending. What economists believe is probable in that event is a recession, as the lack of government spending plunges the economy from growth to contraction. The dollar could plunge, the stock market could plunge along with it, and interest rates are seen higher in that event. What they're worried about, what is possible here, is a global recession, as the knock-on effect of a weaker U.S. economy is felt in countries around the world, and a potential massive disruption in financial markets. The Treasury Department today issuing a report warning of catastrophic consequences in the event the debt ceiling is breached, and they're saying there could be a financial crisis and a recession that could rival or even be worse than the 2008 financial crisis. So markets looking beyond the government shutdown to the debt ceiling breach, which would happen about October 17th, according to current estimates, and they don't like what they see. For Nightly Business Report, I'm Steve Leisman.
But let's not forget that there's a partial government shutdown in its third day and the furlough of 800,000 federal workers, and it's now impacting private sector jobs. One major defense contractor, United Technologies, announcing plans to furlough thousands of its employees if the shutdown drags into next week. And it might not be alone. Dominic Chu has more.
The government shutdown just got very real for many in the private sector. Aerospace and defense contractor United Technologies released a statement saying that it expects to furlough around 2,000 workers on Monday, October 7th. The affected employees are located in Connecticut, Florida, and Alabama at the company's Sikorsky Aircraft Division, which makes the well-known Black Hawk helicopter. Connecticut-based United Technologies is the state's single largest employer. If the current shutdown continues into next month, it could furlough a total of over 5,000 employees, affecting all parts of the company. The issue has to do with a lack of inspectors from the Defense Contract Management Agency, or DCMA. The inspectors are deemed non-essential federal employees, but without them, United Technologies can't manufacture aircraft. And United Technologies isn't the only company affected by or voicing concerns over the government shutdown. Earlier today, the president told a crowd in Maryland that the shutdown is leading to further uncertainty for business leaders with ties to D.C.
Companies worried that their businesses are going to be disrupted because obviously, particularly in an area like Maryland, Virginia, where there are a lot of federal workers, you don't know how that's going to impact the economy.
Plane maker Boeing said that a lack of U.S. aviation officials that certify planes could delay jetliner deliveries. British-based defense contractor BAE Systems says pay and benefits for U.S. employees won't change for at least this week, but that they continue to monitor the possible need for furloughs going forward. One thing seems pretty certain, though. The longer the shutdown lasts, the more furloughs we could see. Dominic Chu, Nightly Business Report in New York.
And joining us now to talk more about what's happening in Washington and what the implications mean for debt ceiling talks is Andrew Friedman. He is the principal at the Washington Update. Welcome. It's a pleasure to have you here.
Thank you.
Were you all at all encouraged by the speaker's indication that he would not let the United States default? I mean, does that give you the indication that there is some movement and there is some progress on the Hill?
I don't know that it means there's any progress, but I am heartened by it nonetheless. And I've been saying I don't think that we will see a default here. The House of Representatives is an unusual place. The Speaker entirely controls what sort of legislation is introduced in front of the House. Normally, the Speaker does not introduce legislation unless a majority of his party wants that legislation introduced. That's why he has been going ahead and having these Obamacare caveats on what's been introduced so far. But I think what the subtext of what happened today was he was saying, look, if we really get to the point where we're on the cusp of defaulting on the debt, I'll introduce legislation that raises the debt limit, and if necessary, we'll pass that with all the Democrats and some moderate Republicans supporting it, and that will alleviate the problem.
Andrew, I wonder what you think of this. Some people have been saying today that all of this very sharp language about catastrophic, the potential of catastrophic consequences if there is a default, and that this could become the worst recession is all part of a strategy to get the markets to sell off, because that would trigger the Congress to take action and close up the deal on this. Do you buy into that?
Well, I don't know if it's that specific, but I think the president is absolutely ratcheting up the rhetoric. Look, I think the Republicans feel a bit cornered now. They demanded changes to Obamacare. That's a non-starter with the Democrats. There's plenty of things that can be negotiated, but that is not one of them. And so for the president to say, look, there's a problem here and you have to deal with it or we're going to have a catastrophic problem, throws it back into Boehner's court. What does Boehner's office indicate? Don't worry, we'll take care of it. We're not going to let anybody default on the debt. So I think it's absolutely a case that the president's ratcheting up the consequences, putting pressure on Boehner. Boehner's trying to hold off those consequences.
But what about the crisis of confidence that Main Street seems to be entering into, about the fact that once again we're being taken to the brink, regardless of what party you're talking about, the fact that it seems that they are willing to take the U.S. economy all the way to the fiscal cliff once again, and that Main Street is starting to suffer from that?
There's no question. I mean, Main Street has been suffering all along. Just go back to the fiscal cliff. You were right to allude to it. That was a midnight deal, and that only passed Congress because Boehner, in fact, introduced legislation that was passed by the Democrats and a few of the Republicans. The bulk of Republicans didn't want it. I think that there is a brinksmanship going on here, and I think it relates to the fact that the Republicans feel, in the House at least, that going into an election year, they don't have to worry about the general election because their districts are largely Republican. They have to worry about the primaries. They don't want to be challenged by somebody further on the right. And so everybody pretty much who's a Republican in the House is trying to protect his flank in that way.
Thank you, Andrew. Appreciate it very much.
Thank you.
The U.S. is expected to become the world's largest producer of oil and natural gas this year. According to the Wall Street Journal, the U.S. may have already overtaken Russian output. The U.S. Energy Information Administration says in July, we produced the equivalent of 22 million barrels of oil, natural gas, and other fuels every single day.
Even without all that homegrown energy being produced, one U.S. company is trying to break the nation's addiction to oil, especially imported foreign oil. And they're doing that by changing what we're putting in our gas tanks. The future of refining may now include natural gas, biomass, and even solid waste. Jackie DeAngelis has the story.
Turning natural gas, biomass, and waste into gasoline for cars and eventually jets. It sounds like a novel concept, but it's actually been explored for years. Now, several companies, including Primus Green Energy, trying to take the technology a step further to make that dream a reality.
Here at Primus's demo facility in New Jersey, the company is showcasing its technology and the practical applications of it for potential investors. They've raised $61 million to date, but they need roughly $200 million more to break ground on the first commercial facility that they're planning sometime next year.
We believe that alternative energy as well as renewable energy, both of them are very important to Israel, to United States, or to any country who would like to have energy independence.
What sets Primus apart? The company says its chemical process for turning nat gas to gasoline is more efficient and can reach a larger scale than the competition, and that's a great recipe for profitability.
Our current estimates of our operating costs, our all-in costs, are $1.65 per gallon.
But what about longevity of the business model? It assumes that regular gas prices stay at these levels and that nat gas doesn't see any significant increase.
The natural gas prices have to go into the double digits for us to be uneconomic given the current estimate of gasoline prices. So what would have to happen is both natural gas prices shooting up and gasoline prices staying constant for us to be in danger.
With respect to scale, Primus's commercial facility will eventually be able to produce roughly 25 to 28 million gallons of gas a year. Not a ton in the scheme of things, so it's going to take time and also money to make this initiative a reality. But if they can do it, it could be game-changing. For Nightly Business Report, I'm Jackie DeAngelis.
And a little later in the program, why are drugstore chains spreading the word about the Affordable Health Care Act? What's in it for them? Also, the CEO of Tenet Healthcare on what the new health rules mean for hospitals. But first, a look at how the international markets fared today.
Twitter late today making public its documents for its initial public offering. Kayla Tausche joins us with more. So highly anticipated by Wall Street.
Highly anticipated, and they do it the way that they've been wont to do. That is by a tweet. A tweet late this afternoon announced that Twitter would be filing its S-1. It only gave us a taste of what the social network would be offering when it goes public in about a month's time. It's going to raise about $1 billion offered by 7 banks. It has 218 million users, and it cited events like Hurricane Sandy and the re-election of Barack Obama as seminal moments in Twitter's history. Now, its revenues were a little light, $253 million at the 6 months ending at the end of June, and it did post a net loss for that period. A lot of investors are going to want to know how much money Twitter is actually making, how profitable it can be, and how highly it's actually valuated. Some say that it could be valued as high as $15 billion when it does go public in about a month, guys.
Wow. Kayla, thank you so much. Kayla Tausche.
The world's largest winemaker, Constellation Brands, trades at an all-time high today, and that's where we begin tonight's market focus. The alcohol giant posting a 35% rise in earnings from a year ago, and that's thanks to stronger beer sales. In June, Constellation bought Grupo Modelo's U.S. beer business from Anheuser-Busch InBev. Shares rose more than 3% today to $60.16. Shares of Eli Lilly tumbled today. The drug maker warned that hitting its full-year 2014 revenue target might be challenging. It blamed it on slower growth in emerging markets and the devaluation of the Japanese yen. Lilly also plans to buy back $5 billion of its stock. The stock today dropped about 3.5% to $48.80.
Shares of electric car company Tesla fell for a second day following a video of a car fire that's circulating on the internet. The video shows the company's Model S Roadster bursting into flames. The company says a metal object directly hit one of the car's battery packs. Shares fell 4% today to close at $173.31. And shares of the world's largest apparel company, PVH Corporation, rose today on news that it will sell nearly all of its G.H. Bass & Company shoe unit to clothing maker G3 Apparel for $50 million. PVH, which owns the Calvin Klein and Tommy Hilfiger brands, rose 4% to $122.69. G3 gained nearly 3% to $55.45, which is a new high. From hospitals to drugstores, what the big chains are doing to get your new health insurance business. That's straight ahead, but first, a look at commodities, treasuries, and currencies.
It's day 3 since the new health exchanges came online. There are still some delays and glitches with the websites, but one big company is getting a shot in the arm. This is Tenet Healthcare. The stock of this big hospital operator jumped 5.5% today and is up about 15% this week following its deal to buy Vanguard Health Systems. Investors are also encouraged that Tenet has a winning strategy to deal with the new healthcare laws. Joining us now, we're happy to have Tenet CEO Trevor Fetter. Mr. Fetter, so nice to have you on the program.
It's very nice to be here. Thanks for inviting me.
So for all the drama and uncertainty about the Affordable Care Act that's going on in Washington, you're still going ahead and behaving as this act is going to become law. What is your strategy?
Well, the strategy is actually rather straightforward. It's very important in this environment to deliver greater value to our customers, and that comes in the form of increasing levels of clinical quality and lower costs. Affordable Care Act or not, we would have pursued that strategy. Some of the things we're doing a little bit differently are preparing ourselves to be positioned very effectively for the increasing numbers of people who have health insurance.
And you have been signing up on contracts with a lot of these insurance exchanges so that you'll be part of their networks for uninsured Americans. From what's been going on this week so far, how's it going?
Well, actually, that's an effort that we've been undertaking for nearly a year now. We were enthusiastic early on about the potential for these exchanges. We thought it would be a very consumer-friendly, transparent way that people would begin to buy insurance for their health, just much in the way as they buy many other things over the internet or in marketplaces. And so we actively engaged with insurance companies beginning, virtually a year ago, so that we would be in network in these insurance programs that are being offered on the exchanges. And I'm very pleased that in about 80% of our markets, we're in some of the most competitively priced insurance plans that are offered on the exchanges.
The other part of your strategy, as I see it, is that you've been also buying up a lot of hospitals. The Vanguard Health deal is just the latest one that adds something like 26 hospitals. Some would argue that in this new landscape, having these huge hospital systems might not be the best way to keep costs down and keep quality of health care up. Tell us what your plan is here. Well, is bigger better, I guess I'm asking you?
Yes, bigger is definitely better. This has been a very fragmented cottage industry for a very long time. And when you're a bigger system, and we're one of the largest in the United States, we're able to take the technology that we use to improve clinical quality and apply it across a bigger platform. We're able to drive efficiencies in the administrative parts of healthcare, which, as you know, are very significant. We can drive efficiencies in the supply chain, in the revenue cycle, and other areas that either don't affect patient care or they enhance the quality of a patient's experience in our hospitals. So I would argue very strongly that bigger is better, and it's about time that this industry has begun to consolidate.
Last night we had the CEO of the Cleveland Clinic on, and he said that because of a drop-off in revenues, because of the way healthcare is changing, that they're going to have to cut, more than $300 million in their costs, possible layoffs. Is Tenet at some point going to have to do the same thing?
Well, we've been cutting costs relentlessly for the past 9 years. In fact, our cost performance has been among the best in the industry. I did see that interview last night, and I think part of the point that Toby was trying to make is that this industry for 3 years now has been dealing with fairly significant cuts in Medicare, much of which was designed to pay for the Affordable Care Act, or at least contribute our fair share to the Affordable Care Act. And hospitals are going to be under relentless cost pressure for the foreseeable future. And once again, scale helps you deal with that.
All right. Well, good luck to you. Thank you so much for coming on the program. We really appreciate it.
Thanks for having me on.
Trevor Fetter, he is the CEO of Tenet Healthcare. Sue?
Susie, when Medicare Part D launched 7 years ago, pharmacies saw a big boost in business from newly insured enrollees. And if the initial interest in the Affordable Care Act's new health insurance exchanges lead to high enrollment, it could mean a whole new source of revenue for those retailers as they help spread the word. Bertha Coombs has more.
The major drugstore chains want to be more than your corner pharmacy. They've come to play a central role during flu season and now aim to do the same for the millions of Americans who gain health coverage through the Affordable Care Act.
I think in general, their ability to play in more parts of Obamacare is key.
Walgreens, CVS, and Rite Aid all signed on with the Department of Health and Human Services to help educate customers about enrolling for health insurance under so-called Obamacare. Analysts say a new wave of insured patients could result in a big bump in profits from the chain's core business of filling prescriptions.
And the way they're going to do that is by helping encourage people who are currently uninsured to enroll for the exchanges and hope that that ultimately turns into higher script utilization in their stores.
But for Walgreens and CVS, the new opportunity for expansion may lie just beyond the pharmacist counter with their in-store clinics. So far, the clinics haven't been a profit driver, but that could change in 2014 as Obamacare coverage begins and millions of newly insured will seek care during the likely peak of cold and flu season.
When a number of people come into the system, it tends to stress the provider networks, meaning there are only a finite number of primary care physicians to care for all these people.
For those who enroll in lower-cost health insurance plans, the clinics could become an attractive alternative to doctors' offices for routine health screenings and visits.
They tend to be a little bit less expensive. And so if a clinic happens to be in your network, especially if you're under one of the higher deductible plans, your first stop may be a clinic at a pharmacy.
But still, the drugstores could face some pretty tough sales comparisons in the fourth quarter. Last year saw a very strong start to flu season. A weaker start this year could pose some headwinds for their shares. For Nightly Business Report, I'm Bertha Coombs in Fort Lee, New Jersey.
CVS Caremark is eager to get your business, not just to buy toothpaste, but to help you stay healthy. It's set up walk-in medical clinics in more than 700 of its stores. They're called Minute Clinic. The company plans to double the number of clinics over the next 4 years. Joining us now, Dr. Andy Sussman. He's president of Minute Clinic and Associate Chief Medical Officer of CVS Caremark. Thanks so much for coming on the program, Dr. Sussman.
Thank you for having me.
Well, you are really counting on getting business from all of these Americans who don't currently have insurance. I mean, how much business are you expecting to get coming to your Minute Clinics?
Well, Minute Clinic and all of our primary care systems face a very significant shortage of primary care physicians. We expect that to reach 45,000 doctors in 2020. And if you take that the population has a growing problem with chronic disease and an aging population, we've really now enter into a period where we're bringing millions of additional patients into the system with the Affordable Care Act. And the simple fact is we do not have enough physicians to provide all of that care. That's where our nurse practitioners at Minute Clinic can help to support the primary care physician medical home around the country. We've been rapidly expanding our clinics. We have 740 clinics now in CVS pharmacies in 27 states. We've added 300 clinics in the last 3 years and expect to get to 1,500 clinics in 2017. We provide care on a walk-in basis 7 days a week, and our nurse practitioners use evidence-based guidelines to take care of patients. And this allows access to care at a time we definitely need it.
Do you have any way of quantifying, though, how much impact the Affordable Care Act will have on the new number of people that are going to be able to access these clinics? I mean, maybe in the past, if they didn't have insurance, they didn't want to fork out whatever it was, $25 for the flu shot. Now they'll be able to do that.
Yeah, we accept coverage from 200 health plans around the country, and we're participating in the exchanges and providing access to patients. And as you know, many patients have high deductible plans, and our low prices can help to provide access to those patients. It's a little early to determine exactly how many patients that will affect, but we believe there'll be a significant increase.
We know a lot of innovation is coming to healthcare, but to what extent do you think that people are still programmed to think that when I'm sick, I'm either going to go to my doctor or an emergency room, and the idea of going to a Minute Clinic in a pharmacy or drugstore chain just doesn't seem quite right? What do you think?
Well, many patients are really functioning as consumers, and what they're looking for is value, low cost, easy access, and good quality. And at Minute Clinic, they can walk in and be seen on a walk-in basis without appointment. Our prices are low. A RAND-sponsored study found our prices 40 to 80% lower than alternative sites of care, and very high quality. We use evidence-based guidelines. And of course, after we see a patient, we send the note over to their physician. So we can help to support the primary care shortage. Patients are increasingly aware that they have alternatives of where to be seen, and our care is very high patient satisfaction because of the value that we're creating.
What about penetration? I know you have a large number of stores, but is there one part of the United States where you think your penetration is greater, and where's the growth area for you as you continue to expand?
Yeah, we're adding clinics all over the country. Actually, this week we just added Hawaii and Louisiana. And beyond that, we're forming affiliations with health systems as well. We have affiliations with 30 major health systems all over the country because everywhere there's a need for high-quality, accessible, low-cost care.
All right. Thanks, Dr. Sussman. We have to run. Thank you so much. Appreciate it. That's it for Nightly Business Report for tonight. I'm Sue Herrera.
And I'm Susie Garib. Have a great evening. We'll see you tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. We are TheStreet.com.
I'm Susie Garib with a Nightly Business Report news brief. High anxiety in Washington and on Wall Street today. On day 3 of the government shutdown, traders turned their attention to the looming debt ceiling crisis, which the Treasury says would be catastrophic if the U.S. is unable to borrow money to pay its debts. Also fraying nerves, police in Washington, D.C. shot and killed a woman who tried to ram her car through a White House security gate. On Wall Street, the Dow fell 136 points, closing below 15,000. The Nasdaq lost 40. The S&P off 15 points. Jobless claims stayed near a 6-year low last week, while planned corporate layoffs fell sharply in September. And a retail group is predicting consumer holiday spending will rise 4% this year to more than $600 billion. Be sure to tune in to Nightly Business Report right here on your public television station.